Brickwork Ratings presents BWR Drishtikone for September 2022. BWR Drishtikone brings you custom insights, principal views of economists, well-informed researchers and industry stalwarts. Let's hear the views of Dr. M. Govinda Rao, the Chief Economic Advisor of Brickwork Rating. Let's glance at the trends of macroeconomic indicators and the views of Brickwork Rating. Tightening monetary situation and continued global concerns to impinge growth recovery. Manufacturing and services sectors continued with strong growth momentum. The warning monetary policy support poses a new challenge to growth prospects, while the RBI has retained its growth projection for FY23 at 7.2%. The constant increase in crude oil prices and rising manufacturing costs continue to exert pressure on inflation. We expect CPI inflation to possibly ease below 6% during H2 FY23, yet it may remain close to 7% in Q2 FY23. BWR expects the policy tightening cycle to continue in the current fiscal until the inflation rate falls within the MPC's target band of 2 to 6%. Rising input costs amid weak rupee scenario continue to widen trade deficit. Due to frequent forex market interventions, forex reserves depleted sharply, and the import over India's foreign exchange reserves fell to 9.1 months in end August 22 compared to 13.6 in the year-ago period. The generation of e-way bills has led to a significant improvement in compliance. Tax collections remain buoyant. Now let's have a look at the sectoral indicators. Credit growth continues to rise, but inflation remains a cause of concern. BWR expects further hikes by the RBI in policy rates in the month of September monetary policy review. Banks' net interest income is expected to face pressure in Q2 FY23. BWR believes that banks will continue to post robust growth in deposits and advances, resulting in reduced gross NPAs and provisions. Uptick in two-wheelers and PVs assists domestic sales recovery. BWR expects the two- and three-wheeler and PV segments to drive recovery in the latter half of the year due to adequate rainfall across the country, along with upcoming festive season, which will keep the demand sentiment positive and help the momentum going. Recent strategic steps by the CEA expected to support long-term growth in renewable power in the country. The regulations on the flexible operations by coal-fired plants are expected to help spell out the future role these plants can play in the power sector, given the slowly rising share of renewable power in the overall power supply mix of the country. Volumes remain strong despite rising pressure in the industry. The industry has started brownfield expansions, acquisition of closed steel plants, and is trying to increase production so as to capture the advantage of higher demand and higher prices both in India and across the globe. In FY23, steel production is expected to be the highest ever. Cement companies exploring alternative input to coal to cut down costs. Cement prices and demand are expected to remain subdued, factoring in the seasonality. Lastly, let's have a view at the debt market indicators. Short-term bond yields continue to rise while long-term slide. Long-term bond yields have shown a softening trend and short-term a hardening trend. In BWR's opinion, in the near term, bond yields are expected to remain at the current level with marginal sideways movement. The ECB's growth may slow down on account of declining interest rates differentials in the near term. For detailed analysis and BWR views, the report is available in the research section of BWR website. If you like the content, please like, share and subscribe to Brickwork Ratings channel for more updates.